Hi, this is Rowland for Money Markets TV. Have you ever been waiting in line for a big event and watched some VIP get ushered in ahead of you without waiting at all? It's annoying. But for the high rollers who get preferred access, it's business as usual. I can't get you past the velvet rope in Vegas, but I can tell you about some ETFs that move you ahead of the line with preferred stocks. Preferred stocks are sort of like a hybrid between stocks and bonds. Like common stocks, they give you partial ownership in the company you're investing in. But like bonds, they give you status above a common stockholder. Preferred stocks, unlike common stocks, almost always have a dividend, and it's usually at a relatively attractive rate. The dividend payment is what's preferred about a preferred stock. If the company pays out a dividend, then all preferred shareholders must be paid before common shareholders receive anything. But while preferred shareholders get paid ahead of commoners, they are outranked by bondholders. No stockholder, common or preferred, gets a dividend if a company falls behind on its loan payments. And even the bondholders have to wait behind Uncle Sam. If a business has a tax liability, the IRS can shove its way to the front of the line. So, why would you want to buy a preferred stock? Well, as I said, they're somewhere between stocks and bonds, so they can be good for investors who find growth stocks too risky and bond yields too low. The problem is that every class of preferred stock has its own unique twist, even different issues from the same company. Building a properly balanced portfolio takes a lot of research. This is where ETFs come in handy. Several specialize in the preferred stock niche, giving you a low-cost, diversified selection. At the moment, U.S. investors can choose from three broad-based preferred stock ETFs: iShares S&P Preferred Stock, Spider Wells Fargo Preferred Stock, and PowerShares Preferred. Any of these may be a good option, but if you're looking for more specialized choices, there are a couple more funds you should know about: the PowerShares Financial Preferred and Global X Canada Preferred. As the name suggests, PGF focuses on preferred stocks issued by financial services companies, mainly banks. But if the banking sector scares you, then you probably shouldn't buy any of the other funds I mentioned either, because most preferred shares come from that industry. Even the three broad-based preferred stock ETFs I named typically have more than 80% allocated to the financial sector. I would love to see a preferred stocks X financials ETF, but if one exists, I'm not aware of it. Under normal circumstances, you probably don't need to hold more than one preferred stock ETF. All the current choices have very similar performance patterns. The exception might be the Canada Fund because it gives you a little geographic diversification. So, are preferred stocks right for you? Given the stock market's recent volatility, you may be rethinking your risk tolerance. Take a look at the ETFs I named today. They may be a good option. I'm Ron Rowland for Money Markets TV. Thank you for watching.